All right, y'all, stop what you're doing because I'm about to ruin the image and the style that you're used to. I don't look funny, but we talking money. Listen, shout out to Shock G, y'all. Founder of Digital Underground. We lost another hip hop icon this week, y'all. And of course, this is the Financial Rebel Show. This is our Saturday Wealthy Conversation. We're doing something a little bit different today, though. So we got a special guest that's hanging out with us today. Mr. Jose Sanchez is going to be in the building with us. Hey, Jose, how you doing?
I'm good. Good afternoon, all.
Good afternoon. Good afternoon. Thank you for joining us.
Yeah. Listen, I like that intro.
Yeah, man. Yeah.
You got bars out here.
Yeah. I mean, everybody knows I'm a hip hop head. And I mean, this year, 2021, has been rough for hip hop. I mean, obviously, we lost X, we lost Black Rob, we lost Shock G, we lost Ecstasy from Houdini, which a lot of people I feel like have kind of forgotten about. And I feel like there's like 2 or 3 more that, Prince Markie D. There's a few more that we lost, man, but these are all young folks. And I mean, the whole point of the Finance Rebel Show is always talking about elevating and bringing up our level of financial education so we can leave legacy and generational wealth to our future generations. And it's just like when you look at those cats in hip hop, I mean, they definitely they left a mark, but they were so young. So young. I mean, Shock G was actually older than what I realized. He's 50 some odd years old. So I didn't realize I think he's like 57. I didn't realize he was that old, but he still looked good. Like he had life, a lot of life. And Shock was a cat to me that had a lot of wisdom. He used to say things that would really make you think. I never forget when he broke down the Biggie versus old Tupac thing and their different styles and the different cadences and what they emphasized on. I always thought that was profound. And I saw that years ago and it resurfaced this year. And it's just like, we lost a real one. We lost a real one. So I hope that we all can recognize that life's short and we live it to the fullest, man. We live it to the fullest. But how are you, Jose?
Good and tired, but always good.
All right. So listen, y'all know we are talking about Black stock companies today. So Jose brought this up, right? Because y'all probably listen, why is Kamari got Jose on here? So Jose brought this up like a million moons ago, right? About Black stock companies. And it always kind of comes up here or there. But Jose had put up an article that featured 5 Black stock-owned companies. And so we thought it would be cool. He thought it would be cool that we go over them. And I agreed. And then he did some preliminary analysis and then, sent it to me, took the initiative. And I was like, all right, well, come on. We got to talk about this. So I hope you're excited about this today, sir.
I am. I actually thought that there would be better information found on these companies.
Yes. Well, don't give away too much. Don't give away too much.
So I will say 2 of them belong in the financial sector, 2 are in communications, and then 1 is in medical. And when you look at those services, our people operate in them a lot. A lot of us are in healthcare, either as nurses, nurse practitioners, so forth and so on.
Yep.
And then with finances, everybody uses a bank.
Well, not everybody. A lot of us, though.
A lot of us, yeah. I wouldn't do better.
We have a large unbanked population, and we saw the IPO or the quote unquote direct listing of Coinbase, and I'll talk about them a little bit more in a minute, and how they are supposedly dedicated towards democratizing financial spaces. However, they won't take a position on Black Lives Matter. And George Floyd. So I find that very, very interesting. But you're right. Yeah. All right. So listen, as we always do every week, let's jump into this market rundown real quick. So this week, the S&P 500 closed at 34,043, another all-time high. Market was up this week about 0.5%. S&P 500 is up 11.23% year to date. So the market is still running. All right. Oil closed at $62. It's been flat on the week. Oil was up 25.8% year to date. So oil is still running. I'm sure you all are feeling that in your pocketbooks and wallets as we see gas prices go up. Usually when oil prices go up, gas prices go up, especially in the summertime. We'll see a little bit more. I've talked about this before, but summertime drive, where they add all the additives and everything else into the gas so it can be environmentally friendly. So we've seen it. Plus, with gas, we've seen the shutdown in Texas and many of the refineries. So there's a clear supply demand story going on there, and it's hurting us. I know I paid like $2.94 yesterday for a gallon of gas, so it's rough. It's rough. Gold closed today at 1776. Or gold closed yesterday at 1776. Gold is down almost 7% year to date, but it's had a bit of a jump these last couple of days. Jose, are you paying attention to any of these major factors? I know you teach financial education as well, so are you paying attention to any of these?
I'm paying attention to gold. So I do my weekly buys of gold and silver.
We got a gold bug in the building, y'all.
Yeah. Jimmy and them from By the Hood got me into precious metals. So I make it a regular habit to get some.
Shout out to By the Hood.
Yeah. Listen, those brothers got knowledge.
So why do you buy gold every week and buy gold and silver? And are you buying like an ETF? Are you buying the actual metals? What are you buying, Jose?
I'm actually buying the metals.
Get into your business.
No, that's cool. That's why we talking. But I buy the actual metals. I don't pay attention to the prices. I just make it a habit to buy.
Okay.
So I buy and just, I just leave it. You just commit yourself to doing it until you get that one bar. That's what I'm actually chasing. I'm chasing one bar of gold.
So are you buying it because you're worried about inflation? Do you just think it's going to be a great long-term investment? What's your motivation?
Just assets for my children. Actually, doesn't bother me one way or another. I'm just buying and holding for my kids, just so they can see what they can actually accumulate on their own. Like, you don't really need to wait for someone else to develop you. You can start as early as possible to develop your own future.
Great. All right. So listen, I got to do a little I told you so segment because y'all don't be listening to me. So I want to pull something up on the screen real quick. Remember we were talking about Coinbase? Not today. I know I just brought it up, but remember we were talking about Coinbase. Matter of fact, remember we were talking about IPOs in general, right? I tell y'all, ignore the IPOs, right? Or not ignore them. Don't buy them. Don't buy them on initial day. Why? Why do you say that? All right. Why don't you want us to buy IPOs? They're the newest, hottest things that are out on the market, right? Why don't you want us to make money? We're trying to get to this bag. Well, usually when you follow everybody else, you're not really getting to the bag. You're kind of just following the herd and you're being like a sheep. And what I always tell folks is that these IPOs, and in this case, it's direct listing, is nothing but a marketing event. It's not a financial event. And usually for us retail investors, we typically lose money in those scenarios. And guess what? True to form, it happened again, yet again.
Mm-hmm.
I hate saying I told you so, but in this case, you know what? I told you so, right? I'm going to start talking my ish because clearly I ain't been listening. People been buying, but they've been losing. That's not the name of the game, folks. If you're really serious about investing and you're looking at history and you're looking at the probabilities, right? Because anything could happen, right? There's always risk when you get into any investment. But if you know this is what always happens, it behooves you to take heed. So have you been following Coinbase at all, Jose?
Yeah, because I'm interested in owning it, just not right now.
So you see you believe it's a good company, right?
Yeah.
So you see that there's a disconnect between the stock price and the actual business operations. So, all right, let's take a look at this real quick and we will begin to hop into our regularly programmed schedule for today. And so again, just wanted to talk about Coinbase real quick. I'm not going to beat y'all up too much though. I know some of y'all were Coinbase, right? But look at this chart. Look at this chart. This is a daily chart. What you're looking at right now, these are candlesticks, right? When you look at this main part of the body here, the top price is the open, the bottom is the close. These two long tails are the ultra lows for the day, and then the ultra highs for the day. So when Coinbase opened, it opened at 381. It opened at 381. Then it hit a high of 429 on first day, which was April 21st. So it opened April 21st. It opened at 381. Now, they talked about Coinbase was supposed to open at around 250. That was the IPO or direct listing price. Nobody gets that price except for the big, huge institutional banks and the super big hedge funds and all the super sophisticated people on Wall Street. It's part of the reason why I say retail investors shouldn't get in on this. All right. So ever since that day, what did the stock do? It went down. So first day opened at 381. We're not even going to talk about the highs and lows. It closed at 328. Next day opened at 348, closed at 322. All right. Next day on the 21st, excuse me, on the 16th, I gave y'all the wrong date. So it opened on the 14th, April 14th. All right. So we're now up to April 16th. Opened at 327. Had a high today, 345. Then it closed at 342. So it bounced back a little bit. Next day, opened at 337, closed at 333. Do y'all see a pattern here?
Yeah.
Opened at 333, closed at 320. Next day, April 21st, opened at 312, closed at 302. Next day, 22nd of April, opened at 305, closed at 293. All right. And yesterday on Friday, it opened at 282 and then it closed at 291. So we had a little bit of a gap that year. But instead of buying at, I don't know, somewhere between 381 and 429 on the 14th of April, you could have bought yesterday at 282. I mean, again, money, investing, stock, business is not about who can run the fastest. It's a marathon. Shout out to Nipsey Hussle. It's a marathon. It's not a sprint, y'all. Sometimes we just got to sit on the sidelines and wait. We just got to sit on the sidelines and wait. And again, true to form, stocks fell again. So I told you so. So can y'all start taking heed and start doing a little bit more research so I don't have to say I told you so, because I don't really get anything out of I told you so. Actually, I hate saying I told you so. But I would have a little fun with it today. Right? Because, at some point, it's like you tell your child, don't do something, don't do something, don't do something. And you don't want to be dogmatic about it. But at their point, it's like, well, all right, we just going to start having fun. We're going to talk a little trash. So it's like, see, I told you not to do that. You wanted to go outside and ride your bike without the training wheels yet, but you're not quite ready. You got to put in a little bit more work. So I don't know. So you want to own Coinbase. So you're looking at it. Do you have an entry level yet, Jose?
I'm looking for it to hit the 170s before I buy in.
Oh, wow. So you waiting. Why 170? How did you come with that number?
That's where I want to do. I'm not necessarily sure that it's going to hit the 170s, but I think it's going to continue to fall for a little bit until we see some earnings. So gotcha. I'm waiting out till about the second quarter reporting.
That sounds like discipline.
I don't have it.
It sounds like we've been talking about practice. All right, so let's talk that, folks. Don Johnson's in the building. What's up, Don? How are you? Katisha's here. Hey, Katisha, how you doing? Happy Saturday. And Kathy Lucas. How are you, Kathy? Happy Saturday to everyone. All right, so we are going to be talking about stocks, Black-owned companies that are publicly traded stock companies. So again, like I said, Jose went and did some work. He looked at some of this stuff. I kind of been looking at it lightly, but not really studying it. And so And so, I could have told you that. That's Black Titan.
Yeah. But I want to know what the book is about. I just saw the cover.
Oh man, you ain't been on my YouTube channel?
Not in the last 2 weeks, brother.
Brother.
Looks like a book I'm gonna have to go get.
It's actually a book you gotta go get. Real quick, just take a quick detour because I love that book so much. It's called Black Titan. It's written about A.G. Gasson's. It was written by A.G. Gasson's niece, I believe. I think niece and grandniece or something like that. But they basically told a story of his life. A.G. Gasson's actually wrote an autobiography also called Green Power. I want to say off the top of my head, I haven't read that one, but I have read Black Titan, and it's an awesome book. It's very inspirational. Basically, A.G. Gaston was a black man from Alabama that became a multi-millionaire during Jim Crow. So clearly he's one in a million. But it goes to show that anybody can do it.
Right.
If you want to
he had in African studies class I was in back in the 90s, they were actually talking about the multitude of millionaires we had during the enslavement period, so forth, Jim Crow period. And we had a lot of our people who actually had a lot of money, wealth accumulation. I mean, that's it.
No. There's another book. Do I have it? No, I don't have it with me. There's another book called Black Fortunes.
Mm-hmm.
And it talks about actually I did a book review on that too, but it talks about the first 6 black millionaires after slavery. It's very powerful, very powerful. So let's see here. Let me show y'all a few things. I got some other books too that I want to do reviews on. Like I said, I just finished up Why White Guys Shouldn't Have All the Fun. That's a great book. But here's mine. I need to do something with the cover. Cover needs to be a bit better. So, but yeah, A.G. Gasson's 10 Rules for Success book review. So you got to check that out, Jose.
Yeah. Summary.
So yeah, but if you haven't read that book, you should read that book. Also read Black Fortunes as well. All right. So what companies do you want to start with, Jose?
I'm gonna start with American Shared Hospital Services. Ticker symbol is AMS.
All right. So real quick, let's just do this. I'm going to put a link in the chat for everybody, so you can kind of all follow along with what we're talking about. So Jose put this article up during, I don't know if it was a Wealthy Wednesdays or Wealthy Conversation, but y'all know we talk stock a lot. All right, so this is titled Top 5 Key Black Publicly Traded Companies in the World. So I think the language is interesting here.
Yeah, the word key.
Yes. And also, this article was published August 26, 2020, and it was published by Light Media Holdings. And Light Media Holdings is one of the companies that are listed here.
Yeah.
So y'all know I have a love for journalism. So just, I think we have to point that out just to be journalistically true, that they made themselves number one. And it's interesting, but we're going to go through them. We're going to go through them all. So y'all know I tell y'all when we start off looking at a stock, I say to go to yahoo.finance.com. And so, Jose, we are starting off with AMH, right?
AMS.
AMS. Okay, so for me, I wouldn't even look at this company, but for this show, we're going to look at it. The reason why I wouldn't even look at this company is because I don't do penny stocks.
There you go.
I don't even look at penny stocks. Penny stocks, man, let me say this. Penny stocks are the spawns of the devil. Okay, they are no good. 9 times out of 10, there's always the extreme, but usually penny stocks suck. All right. They usually succumb to pump and dump schemes where basically somebody wants to see the stock increase in price. They don't have a whole lot of volume, means people aren't typically interested in them. Soon as somebody's interested in them, the volume might go up, the price might go up, and then it usually will fall in a couple of days, right? But people know the pattern and they don't do them. So please avoid penny stocks. But today we're going to talk about them because y'all know I also love Black-owned businesses. If you look at the shirt I have on today, you can see this is a Black-owned supporter. I'm a Black-owned business supporter. Shout out to my man Amir from the Black-owned business group who actually did this shirt. But all right, Jose, take it away, sir. I'm sorry.
Right, so American Shared Hospital Services sells equipment. So it's much needed equipment. They sell equipment for benign tumors, malignant tumors, and a couple of other equipment. Now, the company was started, let's see, from what I know, they were started in the 80s. So between 1980 and now, their share price hasn't really done much. And that was problematic for me to begin with. Because that's a long history of being in business without showing any real appreciation. I don't know when they actually went public, but as you can see at that stock price, no one's really believing in the future of this company.
Okay, so I'm looking at the profile here on Yahoo. So it says American Shared Hospital Services leases radio surgery and radiation therapy equipment to healthcare providers. The company also offers radio surgery equipment for the Gamma Knife, stereostatic radio surgery, a non-invasive procedure to treat malignant and benign brain tumors. Okay, so they do all kinds of equipment for healthcare, cancer, brain tumors, heart surgery, but they're not making no money.
Right. That's problematic.
All right, so I just pulled up the income statement. So at 2020, at the end of 2020, they made a little under 18 million for the year.
Now watch their debt.
What's that?
You got to check their debt though. That's where it gets interesting.
God, now we're at the whoa. So they got all right. So they have 20 million. Excuse me. They have almost 54 million in total assets. All right, and then they have almost 22 million in debt.
That means all their money is going toward repaying debt obligations. How do you operate?
And so their current liabilities are roughly 8 million a year, and their current assets, their current cash, right? Because this is speaking to what Jose is really talking about. Their current cash is roughly 1.4 million. So they have less cash on hand than their current liabilities. I want to say that's the quick ratio or current ratio. I always get them confused. But that basically tells you the health of a company. That ratio tells you the health of a company if they're able to basically satisfy their debts. And I'm sure they have a negative quick or current ratio at this point because they don't have enough cash.
Yeah, AMS's ratio, let's see, is 1.37.
Interesting. All right, so let's let's look at the chart. I'll just use the Yahoo one. I won't do the fancy one on TradingView. Let's look at the max view here. I'll pull up monthly bars. I didn't mean to do bars, I meant to do candles. So this is interesting. So it looks like they went public back in 84. Wow.
Yeah.
And so one of the problems sometimes with these charts is they don't account for corporate action, especially stock splits. And you have to go back and do a lot more due diligence and research to figure that all out. But just taking what we have, they hit a high of basically $11.25 back in 85. That's the highest the stock went to. Let's see, there's another one. Okay, $12.12 in 88. And then from there, they've been kind of on a roller coaster, literally. I mean, when you look at this chart, it's like a roller coaster. I don't know if everybody can see this.
If you just look over that entire time, you see there's a steady decline in value. And I couldn't, for the amount of research I did, I couldn't figure out why they were continually slumping outside of not making their sales margins.
So it looks like, though, going back to 2007, when was the start of the Great Recession, they never really recovered.
Nope.
And so they were teetering with being a penny stock. By the way, everybody, a penny stock is any stock priced, or any stock that is priced below $5 continuously. And so from 07, they just stopped, drip. 08. Yeah, and so they've kind of stayed in this range of
$5. That's a high.
Well, I'm just going back 10 years. My cross triggers aren't working. So they were like a low of $1. And it looks like they hit that low before not too long ago. And they can't go any higher than, like you said, $5 for the last 10 years. So it seems like they are range bound. From $1 to $5 right now, the stock is trading at $2.36.
Yeah.
All right. So what do y'all think? Would y'all be interested in buying this? All right. So a Facebook user says, what kind of equipment? They do a lot of radiation. I'm assuming for cancer treatments, brain tumors, and things like that. So, Doing Ma say, hey, Doing Ma, welcome. So what do you think, Jose?
This is a company that you got to leave alone. You know what I mean? Because if you look at their next competitor, I forget who I saw who produces some of the same type of equipment. That's really what boggled me, is the fact that their next competitor, their stock price is higher, far higher. But I forgot to write that down before today's presentation. I was in the middle of finals when I was doing this research.
Finals? You in school?
Yeah, still in school.
You doing a lot, brother. All right, so let me see if I can find a competitor. Usually, a lot of times it's on Yahoo, but Yahoo's been changing up a lot lately. Because they're going to a premium service.
You got to pay for more.
Yep, and I'm not mad at that.
Wow.
Now it's interesting when you look at this company. I'm just looking at the holders. Some of the top holdings. So you have Dimensional Fund Advisors, Bridgeway, Renaissance Technology, Vanguard Group, Royal Bank of Canada. This is interesting. But clearly that institutional push is not enough for them, because they have roughly 9% of institutional interest into, or 9% of their overall holdings are held by institutions.
Yeah.
So, yeah.
I want to venture and guess that they're doing that. The institutions are doing it just to, for tax sheltering purposes. Like, I don't think they have any belief in the company. I think they're just tax sheltering their money.
Maybe. I mean, some of those though were like Dimensional. Those, they were investment trade, and they are institutional investors. So I don't know if they would really go into the amount of tax sheltering, but there are others who are institutions, and there are a lot of others. For everybody that doesn't know what tax tax sheltering is basically when you put money into a company that really doesn't have any potential or is really, really tax deduction heavy and will be that way. You'll see that a lot in oil and gas operations, but it's really frowned upon by the IRS. So it can be dangerous territory. It's all right. All right. So what questions does anybody have any questions about AMS, American Shared Hospital Services, before we go to the next one? All right. Hey, Miss Edith, how you doing? Say what's up to Jose as well. He's your neighbor in the BX.
Oh, Miss Edith is in the BX?
Yes.
Nice.
All right. So what are the growth projections for that market sector? I would say they're high. Everything for healthcare is high right about now. And Facebook user, do me a favor, give StreamYard, because I am broadcasting live with StreamYard, give them permission to show your name so I can properly address you as a human being. I don't want to say, hey, Facebook user. My mama did raise me with some manners, just a little bit. So, all right, so this is a thumbs up or a thumbs down. Are you copping? You copping this?
This is a surefire thumbs down.
It's a thumbs down. All right, so AMS is a thumbs down. All right, AMS, I'm writing it down. Thumbs down. Somebody do me a favor. Put a thumbs down. Put AMS thumbs down in the chat for me, please, so we can keep track of this. All right, so Miss Edith says BX in his house. She taking it whack. She taking it back.
Yeah.
She using that old school slang.
Mind you, I'm from Harlem though. Like I just recently moved to the Bronx.
You're from Harlem. Oh, okay. So you claim Harlem then?
Yes, I do.
Harlem world. Harlem on the ride. Listen, it seems like the Bronx is the last holdout, but they done lost. Gentrification is here to do a thing.
Yeah, it's gonna come.
Yeah. All right. Thank you, Ms. Edith. Thank you. All right. So Jose, guide the train. Where are we going next, brother?
All right. So we're going to Light Media since they are the one that created this article.
Okay.
Now, this is a communication company. They're into entertainment. Now, originally they were called Christian Media Holdings Incorporated. They changed their name to Light Media Holdings in '97. So they're based in Albany, Georgia, and mostly what they do is put out televangelical services. So all their communication in voice media and radio. They have 88 web domains, and they do video, audio, print, and internet platforms. So they have a huge realm like that they can really move in. Like they can really be producing a message for our people. Like they really could take a stronger stance on producing our media, but they don't. And I think that's what is causing them to stay right where they at 25 cents.
All right. Let's go from the top. Y'all should know the drill by now. Anytime you want to start looking at a company, just go on over to finance.yahoo.com, put in the ticker symbol. For this one, we're looking at Light Media Holdings, ticker symbol LGMH, 25 cents a share. It's roughly $11 million company.
Mm-hmm.
Like Jose said, headquartered in Albany, Georgia. So it says Light Media, like Jose said, 88 web domains. I don't know why they even put that out, but it's neither here nor there. The company owns and operates an FM station, Power 105.5, The King, and Albany. The company was and it was founded in 1997. So this is interesting.
Yeah. Now, here's what I found interesting, though. They do pay a dividend, though. They pay a 13-cent dividend, which makes no sense.
Well, let's look at the financials. So here it is. Yahoo's not giving any information on this. Does this company have investor relations on its website?
I believe so. Yeah.
All right, hold on 1 second, y'all. Yeah, Yahoo said it's too much work to get this. We're not gonna bother with it.
This petty company.
All right, so let's pull this up. Let me find the ticker symbol for this company. I mean, not the ticker, the website. So it's invaluablemedia.com. Let me put this on the screen so everyone can see it.
It means they haven't reported that information. Whenever you see NA and /A, it means that they didn't have the information available.
Right, not applicable because they don't have it. So even with the PE, you can't even tell if the company is overbought or underbought or overvalued, rather. At least not from that one particular ratio. All right, so Light Media, your entire marketing, promotions, and advertising needs all in one powerful global network. This website is yeah, never mind. I'm not gonna be petty.
Yeah. Nah, listen, look. With this one you can be petty because they started this nonsense.
That's true. Listen, I try to take the high road though. Oh, snap. Oh man, my man JT's in the building. Thank you, sir. JT, listen, we need to do something, man. I want to get on. I need to catch the wave, right? I just said I don't like to be petty, yo. JT gives it up straight, no chasing it, y'all. Everybody go subscribe to JT's YouTube channel because he talks a lot about the stuff that I can't talk about for various ethical reasons. But he gives it to you straight, no chasing. So that's my brother out in the Midwest in St. Louis doing his thing. Everybody go subscribe again to JT's channel. And I appreciate the super chat. You are my number 3 super chatter. So thank you, sir. Appreciate you. Now y'all can tell, right? I'm still keeping track of my super chatters. I'm at number 3. I ain't getting that bitty that quick. All right. So back to business. All right. So yeah, even when you click on the investing segment, there's not much there. Now, usually anytime you have a publicly traded company, usually you have an investor relations or investing segment where you can get information about the company, look at their presentations, look at their annual reports, and that's not there. I am sure if they are in compliance, something should have been filed with the SEC, the Securities and Exchange Commission, but we're not doing all that today. It's a 25-cent stock. It's a 25-cent stock. Again, y'all know I tell y'all penny stocks are the spawns of the devil. So yeah. All right. So did you go any deeper with this one at all, Jose?
No. Once I saw enough of the nonsense, I was just like, I'm done. I did go to the SEC just to see where their money was. Okay. So I fill out the Excel spreadsheet that I created. But there's nothing there that warrants them having a dividend. Like, your share price is 24 cents. Why are you giving the people 13 cents? Like, take that money and develop the company. Stall on giving a dividend. Make the company better. Your shareholders will appreciate it if you have any.
But you know what? That's a good point. So let's drill down on that, right? So you're saying that instead of the company giving dividends back directly to shareholders, you're saying that they should reinvest that money, right? So, and I tell y'all all the time that if you're interested in business, part of the reason why I love the stock market is because I love business. And if you want to see the highest place to do business, it is a stock market. Not this company, but it is a stock market. You can learn a lot. And if you are interested in going to business, you can find a lot of jewels there. And I think Jose just kind of tapped into one. He's saying, why pay the money out to shareholders when, in fact, you can put it back into the business? You can reinvest back into the business. Right, Jose?
Yep. The ticker symbol for Light Media is LGMH, Kathy. LGMH.
All right, so I have, I think I can share this. So this is really interesting. I want to pull up. I don't know if anybody can see this. Let me know if y'all can see this. So this is a spreadsheet that Jose put together. All right. So they got, at the time when he did it, it was 13 cents. Let me highlight this right here. They had, Jose did a little research. And so you have red marks here. So listen,
yeah,
my background is accounting, y'all. So anytime I see red, that means a loss. All right. So they lost $348,000, but they're paying out a dividend. So more than likely, they're paying out a dividend from debt. Oh, and look at this. Now, I don't know if these are in thousands or millions or just actual numbers, but they have $60,000 in debt, at least. Is that what you're saying?
Mm-hmm.
Okay. So they have $60,000 in debt. They had $100,000 in revenue. Those numbers are definitely out of whack.
Right.
So so let's think about this right here, y'all. If you made $100 million, let's just keep it simple. Matter of fact, you made $1,000. You made $1,000 for the year, but you owe roughly 60% of that. So you owe roughly $600 in debt. That's not a good place to be. And we haven't even gotten to debt service, right? So we don't know what the bills are. We don't know what they're due. And they also had a loss of $32,000 for the year. Oof.
It was ugly. It was just ugly.
Yeah, very ugly. Very, very ugly. So, all right. So it's a penny stock again. All right. Let's see what folks are saying. Maybe it's very closely held and the dividends are being dispersed to the large. Yeah, but that still makes Jose's point even louder, right? Because if it is, I don't think Amazon showed the holders, right? But that, again, think about this from the lens of business, right? If you're a business owner, and y'all know I love me some Black-owned family businesses, but let's say it's you, a couple siblings, and some cousins, and y'all are taking the money and you are paying it out. You are starving and robbing your company of any chance of growing in the future.
Mm-hmm.
Right? You're basically, you're stealing from yourself instead of reinvesting now. But that is a possibility, right? That's definitely a possibility. So, all right, what does the audience think about this one? It's a Black-owned business. We're talking about them, but it's a penny stock. What do y'all think about it? Put it in the chat. Put it in the chat. All right, so as we're waiting for people to put it in the chat, Jose, what do you think about this company? Is it worth your money, your hard-earned money?
No.
No.
Not even at a quarter.
You ain't got to think about it. You ain't got to. No.
The dividend alone is a turnoff. And I don't mind getting less than $1 on a dividend. Mm-hmm. But the fact that you're spending more on securing shareholders tells me that you don't know how to make your business move.
Okay. So nobody's got no comments on this? No smoke for this? All right. Well, listen, y'all. Remember, you are watching the Finance Rebel Show. Today is Saturday's Wealthy Conversation segment. Do me a favor. Share this out with anybody who's looking to up-level their financial education. improve their financial IQ. The better we are in terms of our finances, the more powerful we become as a community. And listen, the better your overall life is going to be. Everything is impacted by finances, whether it be getting a job, getting back and forth to a job, weighing through the purchase of a vehicle, managing your credit, managing your taxes. It all needs to be talked about so we can do better with our money, folks. All right, so clearly that's a thumbs down for you, right?
Yeah, that's a suggestion. Yeah.
All right, so again, audience, what do y'all think? Thumbs down, thumbs up. All right, so what's the next one on your list, JT?
Sticking with communications, we're going to go to Urban One.
Oh, Lord.
Formerly known as Radio One.
And I am, for the record, for anybody who is who understands Urban One or knowledgeable of Urban One, Kathy Hughes is the founder. I'm a big Kathy Hughes fan, like straight up fanboy. But we're going to be objective and we're going to look at the stock and the overall business of it all. So Urban One, the ticker symbol is UN or UONE.
UONE. UONE.
Now, there are two stock classes for this company, correct?
Yeah, A and B.
Which one should we be looking at?
You're looking at the UONE, not UOEX.
Okay. All right, let's look at it. Urban One, we already know, owns a bunch of radio stations, does some stuff on television. What else you got for this, Jose?
I got nothing for this. This is look, I wanted to say something good because they have my man DL Hughley show on there. So I I love DL Hughley.
Shout out to DL.
But this is a non-investment for me.
Damn, you're not even going to go through the stuff. You're not going to look at it. You're not. It's just no.
It's a no. They have no dividend. I like their share price though. $5.38 I think is a fair share price for them. But they're not making.
So hold on. So when Jose says he thinks it's a fair dividend, he's talking about in relation to what the company's doing.
Yeah.
He's not saying it's a good price.
It's a fair price at $5. Because I don't see them producing anything that's gonna keep them talked about. You know what I mean? Like you have BET. If they had took a position in owning BET, I'd probably be a little bit more interested in Urban One. Because if you start buying up the platforms that have access to consumers, right? Like who's listening to Radio One like that, where there's a voice that you want to hear, right? Like they're not producing any type of show that we want to watch every day or we want to listen to on a daily. Like I said, I like DL Hughley, but I'll just go and look for DL Hughley on his own. I don't need Urban One to do that. So they don't have anything that's really bringing me to them. And then when I look at their numbers, their financials, there's nothing exciting as an investor.
Okay. So to be fair, they probably never had an opportunity to buy BET. Because once Robert Johnson sold, he sold directly to Viacom. So they never had a chance to do that. Just to be fair. Fair, but to your point, I mean, there's so much younger talent out there. You would think they could be going after young Black talent and creating more content on their platform, or more original programming on their platform, and it doesn't seem like they're doing it.
No. I did want to at least check them out to see what they offer. And when I caught it, I think it was just a bad day. They didn't have nothing on there but trauma porn, so I turned it off.
So for the record, every now and again, you might catch me on a Radio One platform. That might be dead after this, because Jose has basically trashed them. But hey, I'm committed to the truth and only the truth, y'all. So let's look at this. All right, as you always say, finance.yahoo.com. We going straight to the profile. We see here Kathy Hughes is the chairperson of the board. All right, her son Alfred Liggins is the CEO, president, treasurer of the board. She makes about $1 million from this. He makes about $5 million from this. They are headquartered in Maryland. So it says Urban One, together with his subsidiaries, operates an urban-oriented multimedia company in the United States. The company operates through 4 segments: radio broadcasting, cable television, reach media, and digital. The radio broadcasting segment includes radio broadcasting operates that primarily target African American and urban listeners. As of December 31st, 2020, it owned and operated 63 broadcast stations, including 54 FM and AM stations, 7 HD stations, and 2 low-power television stations under the Radio One trade name, located in 13 urban markets. So, it's again, it's
growing, but
it's growing.
This is I want to say this is a young company looking for its voice at this point. Like, I don't think they're not where they're supposed to be.
Now, I do think this is interesting, right? The digital segment owns Interactive One, a digital platform serving the African American community through social content, news, information, entertainment websites, including Cassius and Bossip. I didn't know they owned Bossip, and Hip Hop Wired. That's another kind of big, well-trafficked hip hop channel. So I didn't know that.
They also have Madame Noir.
Oh, they have Madame Noir?
Yeah.
Is that on here? Did I miss it? Oh, yeah, it was right there, Madame Noir. I didn't know that.
So, like I said, it's a young company. So right now, it's not an interesting investment for me. Maybe down the line, it might pique my interest. But right now, there's nothing on there that's telling me that they're going to be good 10 years from now. That's how I look at investments. Like, I have to see a way for you to generate profit over a long time period. 10 years is my capstone. So
now, why long term?
And
by the way, y'all, I know it seems like Jose is like my perfect prototype, right? He was doing this before we even met, y'all. So I didn't pay him to do this, right? But we gonna take advantage of it. So why long term? 10 years? That's a long time, brother. Why 10 years?
10 years because my youngest child is actually 11. So 10 years from now, she'll be just entering adulthood, and I want to be able to pass on to her assets that she can grow. My son is 13, so he's slightly older than that 10 year, but 10 years is my capstone based on their age.
Okay. All right. So it seems like more of your investments are more generationally focused than just for you growing or just for you making money. Okay. All right. Yeah, I just read that off. This might have came, and I didn't see it. So, yeah, they got at least 63 stations. All right. So it looks like they're making some money.
Now, their stock price did dip from the time I did the report till now. It was trading at $5.38 when I did the report. It's now $5.16.
Okay.
There is a lag in the information, but.
Well, just to run through the numbers real quick, right? So it looks like they made roughly $376 million in 2020. And let's see. They're making some money, but they had a loss because it looks like they had a couple of one-time events. Interesting.
And then those one-time events could be just buying more platforms. You know what I mean?
Right.
They've been acquiring radio stations and so forth and so on. But I get it. As a young company, this isn't an investment right now.
Well, you keep saying a young company. They're not a young company, though. They rebranded.
Right. But young in terms of what they're trying to do. This was
Okay.
we were founded in 1980, so they're about as old as I am. I was born 1980, so they're about 40 years old, but they didn't have any reach or any voice up until recently when they started targeting us.
Well, they always started with targeting us. I mean, that was Kathy Hughes' thing. They started in DC with Black on Radio and went from there. But I get what you're saying. I get what you're saying.
Yeah.
Now they roughly have about 74 million in the bank, 73 million in the bank. Interesting.
So this is a company I would like to see them really reach new artists and develop content. Like if they can start doing that, but not selling us the same trauma porn stories. I don't want to see no drug dealers. I don't want to see, you know what I mean? Like show us who we actually show the other side of who we are. You know what I mean? Show the I don't want to say the Cosbys, but that type of voice. I want to see like the different worlds. I want to, you know what I mean? Like I want to living singles. Like I want to see that type of content development from Urban One because it's a better message than what we normally see when it comes to urban targeted media.
I get it. Have they purchased outlets or markets other than Black audiences? Well, the target is Black audiences, so I would imagine not. Or I would imagine not, rather. Excuse me for my mispronunciation. But it'll be very interesting. It'll be, I think this story is very interesting. I think we're all pulling for Urban One because we want to see Urban One do better.
Mm-hmm.
Because, everybody's kind of a Kathy Hughes fan. But I don't know. And we saw the stock price jump. What was it? I want to say earlier this year and last year, because, there was this big push to support Black-owned businesses via the stock market.
Right.
And I've talked about that a lot and, basically said that's not a great idea because it's one thing to invest or patronize a Black business where you are going there, you're buying their goods or services, and you're putting money directly into the company. However, with the stock market, there was already an event called an IPO or some type of direct listing, and the money isn't necessarily going to the company; it's going to different people in the marketplace. So,
yeah, AE, you're right. I don't want to see what happened to BET happen to Urban One either, but I don't know.
So all right, let's talk about that. Let's take a quick detour. A.E. Daniels. I don't want to see what happened to BET started by Black, later purchased by Viacom. Why not? Why don't you want to see that happen? I'm really interested in your viewpoint on that. Are they a content producer or just a broadcaster? They are both. They are both. Because again, they had the TV side, which is labeled under TV One. And then they have a lot of the radio, which is Radio One, where they're doing broadcasts. But many of the broadcasts oftentimes are produced in-house as well. I'm sure they carry some syndicated shows. I don't know exactly what they are. DL Hughley, I'm pretty sure, is probably syndicated. Which means when I say syndicated, meaning that they're being carried across various stations across the country. And it's not necessarily content that's exclusively created for a Radio One or Urban One company or channel station. All right, so I'm waiting on A.E. Daniels to respond back to that. But while we're waiting, let's again we saw the stock spike. When was this? Back in June of 2020. It hit $20. Hit $20. $20.25. Let me pull it up on the screen real quick. And so, again, we have to be mindful when people just kind of jump on the bandwagon. So back here in June, it hit, it went higher than that. It went as high as $54. It went as high as $54.16. So that tells y'all something. I want y'all to pay attention to this. It went as high as $54.16. in June. Next month, it was $21. Now it's down to $5. So all that black investing power kind of equated to a pump and dump scenario.
Yep.
It equated to a pump and dump scenario, and again, but it wasn't lasting. It wasn't sustaining, and so you gotta think about the moves you make when you're investing your money. But not going to veer off too much. Just we'll hold some of our more commentary towards the end. All right, so the depiction of our people and the content changes. If you remember, they had re-airing of Cosby, Family Matters, and more positive-driven shows once Viacom brought it. They changed the whole airing and direction. Right. I agree. I'm not a fan of BET, but there was some telling things, right? The Boondocks made a lot of jokes about BET. It clearly changed when Bob Johnson and Robert Johnson sold out. But we have to think about things, right, a little bit differently if we're looking at it from the money angle. I know a lot of times we don't want to see our black brands get sold to white companies. I get it. I really do. But we have to also realize that oftentimes this is the number one asset that these folks will ever have. And if they don't sell out, they'll never be able to cash out.
Yeah.
And so, Bob Johnson is now doing some other things. He actually has some other publicly traded companies now that Jose and I will come back to in another time and talk about. But if he didn't get that capital infusion, he wouldn't be able to do some of the things he's doing now. And one of the things that Robert Johnson said the whole time is that he tried to do the news, like when you saw Tavis Smiley and many of the other people, it didn't make them any money because people wouldn't tune in. Only the videos made money. What does that tell us? And I know a lot of times we get mad at radio and programming and things like that. I get it. But what does that tell us? I mean, because if we're going to be objective, right, we got to be able to look at the whole view of things, good, bad, or indifferent. Yeah. And really just really hone in and look at it. But we can't just only talk about one side of it. But what does that tell us as a community, though? So
yeah, we were only supporting them when they were playing the ratchet.
And a lot of us talk about radio now. Not many of us really listen to radio. Our youth definitely don't really listen to the radio. Mm-hmm. But we get mad because they play quote unquote ratchet music, which I do think is a little unfair, but it is programmed. It's programmed usually national. So it's not programmed in mind with local anymore. Typically, it's usually programmed in mind with national. What does that tell us, though? However, young artists, new artists, quote unquote alternative artists, have a whole other lane that they can capitalize on called social media and streaming platforms. They're not the best either. Everything has an issue, but it's easier for an artist to get on now than it was 20 years ago. Absolutely. Because there's not as many gatekeepers. Right. That's a fact. Now people don't support what we should, like we do News 11. Yes, that was my point. And listen, it's frustrating, right? It's frustrating because listen, there should be more people that look like me and Jose talking about money. But where would somebody bring us on to pay us to do that? We kind of had to do it on our own because we love doing what we do and we love our people. And so if we never get a strong following, we might retire broke, and never really get anything out of this. I'm just saying when you look at it. All right. So let's see. I saw. So is the goal to hold or always have an exit strategy? Please advise. I think it depends. It depends on what you want to do.
Yeah.
It's funny. I was talking to a client of mine last night. He asked me, should we build businesses to sell or should we build businesses to keep? I said, we should build them to sell. The reason why I said we should build them to sell is because you could always change your mind about selling, but you will always be able to build the biggest amount of value in that company if you build it to sell. So you always want to have options.
Yeah.
But yeah, we could go into this. We can go into this forever. This is a whole other discussion.
Yeah.
Let's get back to looking at these stocks. All right, so Urban One. So, would you buy Urban One? Yeah. Thumbs up, thumbs down.
I'm split. Like I said, because of its youngness in what it's trying to do, I'm kind of interested in taking a small stake in them and speculating for about 5 years.
Okay.
Yeah. So this one was a hard one for me. So I have no true yes or no investment on this one for me personally.
Okay. So this one's indifferent.
Yeah. And this is one of the only ones that I'm indifferent.
Come on, you tipping your hand now.
Yeah. No, the rest of the other two, the last two that we're gonna talk about is in the financial the financial services sector.
Okay.
And I thought I would see something there that would be like, yes, but no.
All right, who you got next?
So up next, we're gonna do Broadway Financial. Ticker symbol BYFC.
All right, so Broadway Financial is next, y'all.
That is a bank, and banks always make money. Always, banks always make money because you always got to pay the house.
Not always, but yes, I know the adage. I don't think this is one of those. All right.
Oh.
Broadway Financial is $150 million company. This is what you would consider a nano cap, like super duper small.
Yeah. And the price of entry, $2.07. It fits the small wallet perfectly, but under the hood, it's disgusting.
All right, so hold on. Let me go back. I broke the rule. Let's go to the profile. Let's see what they all about. Headquartered in LA. There's no COO. Oh, there it is. So Mr. Brian Argret is the COO, and he's not paid. That's interesting.
No, it's not that he's not paid. He's just not reporting how much he's getting paid.
Right, but his other folks, the VP, the CFO, the EVP, they're all reporting salary, but he's not. So that to me is strange. But we'll come back to it. So Broadway Financial Corporation operates as a holding company for Broadway Federal Bank that provides various banking products and services in the United States. It accepts various deposits accounts, including savings accounts, checking accounts, now accounts, money market accounts, and financial certificates of deposits. The company also mortgages loans, which are secured by multi-family residential property. All right, so it's mortgages. All right, single-family residential and commercial, including churches, as well as commercial banks, construction, and consumer loans. In addition, it invests in securities issued by the federal government, residential mortgage-backed securities, and other investments. The company operates through 3 branches, so they only have 3 branches, and was founded in 1946, y'all.
Yeah.
In 1946. So this bank is over 75 years old, 74 years old, somewhere around there. All right, so that's interesting. Where the cash at, though? They did roughly 13 million in revenue in 2020.
Mm-hmm.
It's a penny stock, so you already know how I feel about that. And they had a loss of roughly 650,000-ish bucks. Yeah. Let's see, how much cash do they have? About 96 million. Now, I'm not sure out of that cash how much of that is deposits. So this is interesting. So What what do you think? What do you think?
This is a no. Again, no dividend. So I'm always interested in a company paying me back for investing in them. Because they don't have a dividend, this was already a no for me. Net income to shareholders, this was a negative number, and that's problematic. This was down 642 at 642,000 at the time this report was done. And
what is that, Jose?
Oh, that's my Excel. I'm going across.
That sounds like an old school typewriter.
Yeah, I'm old school. I like those old sounds.
Okay.
So, they made money, but then you look at how much their total debt value is, right? So their total debt at the time of the report was $113,810,000. So they have far more debt. They're carrying far more debt than they have income coming in. And I don't like to see that unless unless you have a real big research and development team, and the bank doesn't have that. So
got you. I got you.
And then having only 3 locations, you're not going to be servicing enough consumers for you to produce additional revenue long term. So only 3 locations, it's going to be hard for you to continue growing.
But I wonder if this bank is suffering what many Black-owned banks suffer across the country, and that's lack of support from the Black community.
Yeah, I'm absolutely certain that's part of it.
Yeah, and when I say support, I'm not talking about stock price. I'm talking about actually going and making deposits in the bank.
Yeah.
And I can't speak to how good or how bad their operations are and customer service and things like that. But I'm Black. It's a Black show. We talk about all these things, definitely from a financial slant. All banks aren't created equal, so it's hard. It's hard.
Now, the crazy part with these banks is, if you read The Monster from Jekyll Island, it speaks to the fact that these urban banks, these banks that were located within our communities, often are suffocated or starved from outside. And that also creates more of a problem. So if we're also not depositing money into these banks, and then you have bigger institutions starving off their ability to expand, it's a double whammy. And I think that's what Broadway Financial is suffering from.
Okay. Would you buy it?
No.
Anybody in the audience, would you buy it? My discipline tells me I wouldn't even look at this. So I'm not even.
Yeah. That's the problem. Not the problem, but that is really where it's at. Without the ability to expand, they're not going to reach more people.
Right.
And obviously with Chase Bank, Citibank, Bank of America, Wells Fargo, with them, those banks entering into those communities, we're taught to trust them more than, say, a Broadway Financial.
Right. So, all right, would that include mortgage loans that are being paid off? So technically any loan so this is accounting 101, y'all. Any loan that they made would be an asset.
Mm-hmm.
So it will be a part of their assets. Any loan, any money that they got through loans, that would be a liability. So when we just kind of quickly ran through it, and I don't know, I didn't scroll through, I didn't see the mortgages that were there. Most people that originate mortgages typically sell them off. They're securitized and they're sold off to investors, because it's really hard to put that amount of money. Let's think about real estate in LA, right? 500,000 isn't probably too far from an average price home in that area. It would be hard to keep loaning out $500,000 and be able to be open to do business, right? Because then they're getting that money back over 30 years, but you have to have a big enough war chest in order to survive that long, just making money off of the payments coming back. Yeah. So a lot of times the originators of the mortgages or the banks, they will originally originally make the mortgage. They'll put the money out, and then they will quickly sell it to someone else so they can get their money back, so they can keep doing business.
Yeah.
So, all right. So it's $2. All right. So you say no. What do y'all think? Anybody interested in Broadway Financial Company or Broadway Bank? All right. So just going back to some of these others.
Hold it like Ford stuff.
So Miss Edith, that she's referring to Urban One. And E. Daniels gave it a thumbs down. Okay, she was talking about Broadway. Yep. Yeah. So listen, it's interesting. So what we got, 2 more or 1 more?
1 more. We have Carver Bank next.
Carver Bank.
And this is my home bank. This is the issue.
So when you say home bank, are you saying that you bank with them?
My grandmother has a Carver's account.
But you don't?
No.
Okay. All right. We can't talk about Nana. We talking about you.
So this bank is actually there's a location that's located directly in Harlem on 116th, in and around that area. So it's right there in the middle of Harlem, and it's a big bank. There's another one in Brooklyn. I opened my children a savings account with them with $5 some years ago.
So you only put $5 in there? Did you put any more in there?
No.
Oh, come on, man.
Yeah.
You do $5 a pay at least, right? Support them black banks. All right, so Carver is trading at $8.52. It's a $28 million company. All right, $28 million company. Now let's go to the profile. See, this CEO gets paid.
Yeah.
Right. So that's why I said it's a little different here. All right, makes about 385,000. VP makes 256. Chief credit officer makes about 210,000. All right, so Carver Bancorp operates as a holding company. Holding companies are very that's basically how all banks are run. Mm-hmm. Holding company for Carver Federal Savings Bank, a federally chartered savings bank that provides consumer and commercial banking services for consumers, businesses, and governmental and quasi-governmental agencies, primarily in New York. It accepts various deposit products, including demand, savings, and time deposits. Passbook. Ooh, I haven't heard the term passbook. Passbook and statement accounts and certificates of deposits and individual retirement accounts. Mm-hmm. The company also provides lending products such as 1 to 4 family residential. So they're talking about single family to a quadruplex, multifamily multifamily real estate and commercial real estate and construction. So they'll do construction loans as well. Business and small and SBA or Small Business Administration loans and consumer and other loans. Okay.
So now when my apparel company first launched, we got a small business loan from Carver Bank through the SBA program at the state office building in Harlem. It was for like $2,500 or something like that. It was a few years ago. So I'm not 100% negative on Carver. I just won't use them as a banking service.
Okay. But, we're not, there is a difference between using them as a service versus investing your money in them.
Now, I think this is a hard no.
You don't give no build up at all. You just straight no chaser. No.
None. I like to take the Band-Aid off. So when I did the report, the stock price was $9.45. It has steadily fallen since then.
Okay.
So, financially, I think they paid their top people too much money without expanding the business out more. Like I said, they have a few locations in the city of New York. Not enough to make a strong presence. So,
So let's look at the money. Where the money reside, y'all.
yeah.
So for their year ending of March 31st, 2020, they had revenue of 19 million,
Mhm.
735. So 19 million bucks roughly.
Yeah.
All right, let's see if they had any profits. And they're not profitable.
No.
And they haven't been profitable for at least the last 3 years almost, last 2 years. So that's interesting. That's interesting. So clearly the bank doesn't always make money. Let's see here real quick. Let's see here. All right, how much money do they have? They got a little under $500 million in total assets. A little under 50 million in cash. Now, if you see this here, this Federal Home Loan Bank stock, that's some of those loans we were talking about before that are on their balance sheet. So they're on there as assets. So they do have some on there as assets. So this is interesting. Yeah. This is interesting.
Now, what I did like is that they do a solid job of investing. So they do take some of their monies and they do put it right back into the stock market to keep the company afloat. But I don't think long term that's going to be a survival tactic that they're going to always be able to rely on.
Okay. So this is a hard no also.
Yeah. And it's sad. Like this was one that I was like, nah, they got to be at least right there. And they're falling shy of that. Like I said, no profit for 3 straight years and no real explanation as to why no profit. When I opened the children's savings account, they were pushing to drive more consumers in. And there was a huge push in Brooklyn to do it. I didn't necessarily see that reflected in Harlem. I don't know where their other locations are in the city. But if you're going to do a plan like that, it has to be coordinated and it has to be long term. I didn't see any long term, marketing toward getting more consumers in the building.
But it's really hard to market when you are losing money in the first place.
Right.
So, I mean, again, in any business, right, you need marketing, some form of marketing. But a lot of times people will cut marketing and cut what they think is not essential. And in lean times and hard times, which actually helps to make the money situation worse over time. Because if you're not marketing, you're never bringing in new money.
Right.
You're not investing in customer acquisition. So it can be rough. It can be really rough.
And that, this is the hard part, because when you look at the salaries that you're paying your top people, and then you look at your turnover in terms of profit, you're giving them more of the money for them essentially to do nothing.
Yeah, but it's also New York, right? How do you attract talent in New York? Like you can't even buy a hot dog in New York for less than $10. So I mean, like, what do you want to do? I mean, Starbucks, in my part of the world is like $4. Again, in New York, it's like $20. So, like, what do you want them to do? It's a vicious cycle. It is
a vicious cycle. But with social media, they have the ability to make their voices a lot louder at far less of a cost.
But what a lot of people don't recognize is banking is a highly, highly, highly regulated industry.
It is.
So they can't always do social the way we can. You can do some things, though. It does take credibility. So I'm not saying no to what you're saying or denying it. I'm just saying that a lot of times they won't. I tried to actually, I've done some, I won't say work because I wasn't paid, but I've helped to promote some Black-owned companies, Black-owned banks. And part of the reason why they don't have as much of a social presence is because they're afraid of the regulations. So I don't know. But what do y'all think? Everybody that's listening, what do you think about Carver? Would you buy it? Do you think it's a good investment? I mean, when we go back and we look at all these banks or all these companies, we had American Medical, we had Lighthouse, we had Urban One, we have Carver, and we had what was the last one we looked at?
Yeah, Light Media, Broadway Financial.
Light Media. Thank you.
Carver, American Shared, and Urban One. Yeah.
So out of all these, it sounds like Urban One is the one you're most interested in.
Yeah, Urban One is the one that I would put some money in. And like I said, it would be in a speculative account. It wouldn't be in like my long-term holdings.
So I'm gonna tell you, there's only one company that I might be kind of interested in, and it's not because of the stock price, right? Because none of the stock prices get me excited.
Right.
I am kind of interested in the American
American Shared Hospital Services.
Yes, because cancer is a thing. It's not going away any longer. Mm-hmm. When you look at the economics of healthcare, again, with the aging population here in the United States, mm-hmm. I think that's the one just from those dynamics, right? When we look at the global, or not the global, but yeah, the global macro factors that are going on, I think that one that could have the biggest bang for its buck. But the question is, at what point? And I don't know. Now, is that the one that was paying the dividend?
Let's see. Light Media. No. Light Media was the one with 13 cents.
Yeah, Light. Yeah. I'm trying not to disparage any of them. But I'll say this, listen. My discipline, I don't invest in penny stocks, right? Unless they were, I'll tell you a story. Bank of America years ago went to $4.50. I knew Bank of America wasn't going to stay at $4.50 because it was one of the largest banks in the country. Still is one of the largest banks in the country. Yeah. Now, I talked about this on radio. I announced it. I missed it. I think I might have told the story before. I didn't wind up investing until like $7 or $8. But I knew it wasn't going to stay a penny stock. So that was an exception. And when you look at it now, it's north of $35 a share. Mm-hmm. So it didn't stay there. So I would make an exception for that. But for the most part, I don't invest in penny stocks because usually penny stocks don't move.
Yeah. Well, it's going to take a lot for them to move. And that's just why, like I said, I would hold Urban One in a speculative account with 5 years as my time horizon. Mm. And depending on how it does in that 5 years, I might reinvest or divest. It just really depends.
Right. No, I get that. There's time to speculate. But yeah. And listen, y'all, we've been here for a while today. Yeah. We had a great conversation about Black publicly traded stock companies. Do us a favor, share this out with anybody who's looking to increase their overall financial knowledge. But just because it's a Black company doesn't mean that you should invest in it. We've seen a couple of run-ups over the last year. Carver was part of that. Urban One was a part of that. But if you haven't seen anything material change in the company and they're just buying it because of the hype, sure, you can take advantage of it in the short term. But know that 9 times out of 10, it's going to fall. And it's going to fall hard. And usually when it falls hard, that means your money is open to be beat up. So I wouldn't do any of that. I thank you for joining us today, Jose. Appreciate you. Appreciate the analysis. Listen, we're going to do a part 2. So there are a couple other Black-owned businesses that are actually publicly traded that we should analyze as well. So let's work on that one next, Jose. You down for that?
Yeah, I'm definitely down for that. I'll try to do better at just ripping off the Band-Aid.
Nah, listen. It is what it is, right? It is what it is. But listen, everybody, y'all have a great Saturday. Do something nice for yourself. Go out and get a walk, get some sunshine, drink some water, and tell your people you love them, all right? Because life is short. Life is short. We keep seeing all these folks dying, and tomorrow is not promised. So just remember that. All right, everybody. Everyone have a great day. So long.
Peace.